Good morning, Binanceans. Welcome to episode 4 of Binance Beach, your weekly Aussie crypto briefing. Today, I'm flying solo and I'm going to be taking you through everything you need to know about the Ethereum ETFs, which launched this week in the US, along with our normal segments in local news and interesting callouts from the week. Let's get straight into it. As usual, I'll pull up the price charts. We have another green week this week, which is exciting. As always, we're up 4.61%, and Bitcoin is currently sitting just above the $66,000 US mark. That's a nice rebound after last week's strong action as well. Last week was an awesome green week, but the previous couple of weeks we did see a bit of red across the market. So nice to see some strength there from Bitcoin. Interestingly, though, and important to note from a local perspective, the Aussie dollar did have a bit of a weakening this week as well, down around 2% over the last 5 to 7 days. It looks like that might be due to a decline in the price of oil, iron ore, and copper. So if you are tracking your portfolio in Australian dollars, you might be seeing some stronger performance again than our US numbers. In terms of interesting news from this week, of course, the ETFs launched, which is fantastic. I'm going to be running through those in a lot more detail shortly, so I'll leave it there for the minute. In other cool and interesting callouts, we had a Bitcoin logo taking over the Las Vegas sphere. This is super cool and great marketing for the leading cryptocurrency by market cap. Ferrari said they're going to begin accepting crypto payments in the EU. They have done that in the US since 2023, but really cool to see traditional and luxury brands jumping onto crypto and accepting crypto payments. Obviously, the old phrase is when Lambo, but maybe when Ferrari for this run. July 24th saw over $1 trillion wiped out of the US stock market, which maybe seems to be overflowing into crypto markets after the last couple of days were a little down. And of course, in other local news, unfortunately, HSBC Bank informed their customers from July 24th that they would be blocking payments to crypto exchanges. They said they would continue to allow withdrawals and cited fraud protection as the reason for this. Of course, Binance and many of the other leading crypto exchanges take user protection and fraud very seriously and have contributed quite a lot to helping to cut that down for Aussie and global users. But it is sad news and obviously an ongoing challenge for the local industry. In terms of a better local news spotlight, there was an awesome event held, I'm told, in Sydney this week, the Digital Asset Impact List, held by an organization called Blockchain APAC. And that was a great evening celebrating a few notable figures in the local industry, from what I hear. But let's move on to ETH ETFs. So this is something that's been coming for quite a while and was heralded as potentially a bullish market catalyst. So it's been great to see these finally go live this week, ending a little bit of market uncertainty. And I'm going to run through for you today what they are, who are the providers, why it's important, and then we'll do a bit of analysis on the price action from this first week as well. So we'll kick it off, and where better to go than Binance Academy to help us with what is an Ethereum ETF. An ETH ETF basically allows investors to gain exposure to ETH, but without needing to directly buy or store the asset. Using the ETF, they can go through more traditional means for buying assets like stocks through their normal brokerage account, for example, a Fidelity brokerage account. And that means that they don't have to take on the risk, per se, of holding that asset themselves. They can have a custodian hold that asset for them as a third party. There's a bunch of benefits, including the regulatory protection and some regulatory clarity that comes with classifying ETH as an asset that can be, or a commodity that can be built into a ETF. But of course, it also helps with liquidity. But of course, as with all investment assets, there are risks, including volatility and differences between the spot market price of ETH or the value of the ETH ETF shares. So that's a little bit of a rundown. Of course, I'll leave this Binance Academy article in the show notes so you can go and have a bit more of a read about why they are, what they are, and how they actually work. Who are the providers? Who's offering this product? Well, there's a range of providers. We have the Grayscale Ethereum Trust, which is a trust that's been available since 2017. And then there are what's been coined the new 8, which are the new 8 Ethereum ETFs that launched this week. BlackRock, Fidelity, and Franklin Templeton are 3 of those providers. They're very traditional investment managers and ETF issuers with trillions of dollars of assets under management. But also in the race at the moment are VanEck and Bitwise, which are more crypto native asset managers. And we definitely see that in the way that they're selling the asset as well, selling the ETF as well. Grayscale is seeing the largest volume so far. Grayscale launched the Ethereum ETF, the Ethereum Trust in 2017, which actually allowed institutional investors to purchase ETH ahead of these ETFs being available. But the liquidity on that product wasn't amazing. It was including a 6-month lockup period as well on those purchases. So while it was a way for institutions to get exposure to ETH in the US, it wasn't necessarily as easy, fast, or liquid as buying ETH in the spot market like these ETFs now allow us to do. You'll notice here that Grayscale has 2 products on the list of providers. They also have the Ethereum Mini ETF, which is an interesting product and is built now to compete more directly with the other ETF issuers. It's actually meant to be a budget product with only a fee of 0.515%, which is the lowest of the new ETF offerings. The other fees for the other providers range from about 0.19 to 0.25%, but a lot of the issuers are initially waiving fees. So it'll be interesting to see who gets ahead in this race. We're likely to continue to see outflows from the Grayscale ETF trust, but potentially some of those flows may move to Grayscale's mini ETF here, given that the fees are significantly better. So we hear traditional finances here, TradFi is here, the institutions are here. We hear this often when people are talking about bullish catalysts, and particularly bullish catalysts for this potential run. So let's have a look at how these providers are actually selling ETH. How are they packaging this up for an institutional or a more traditional investment market? Well, here's BlackRock's ad. Very traditional, very similar to some of BlackRock's other pieces. We've got a man in a suit who basically takes a couple of minutes to run through the key benefits of Ether as an asset. It's very direct to camera piece, and again, very similar to what BlackRock has traditionally run in terms of advertising. Very serious, very straight to the point. Bitcoin's been sold or compared often to digital gold, particularly by some of these larger institutional asset managers in the past. We've heard the phrase digital oil be thrown around with Ethereum as a way, or a digital app store, a decentralized app store. So those are some of the things you might expect to hear out of a provider like BlackRock as they look to package up this product for their potential clients. More crypto native firm VanEck opted to run a really funny little ad using Pudgy Penguins, which are obviously a very famous NFT project built on Ethereum in our space, and definitely one that's had a lot of momentum this year. So this ad definitely seems to appeal a lot more to traditionally crypto native audiences rather than your institutional or traditional stock investors. And finally, Bitwise. This has been a really funny little series of ads as well. Very amusing, really well put together by this provider. And they've focused on comparing traditional finance to Ethereum as a potentially alternate solution, and have really looked at some of Ethereum's key competitive advantages over the traditional markets, including the fact that it's 24/7 and never sleeps. These are really funny little ads too. I definitely recommend checking them out. Well, how has our price performed so far for ETH since the launch of the ETFs? Well, it's been a little bit red so far. Potentially some macro factors contributing to that. But I'll move back to the day one flows, because I think this helps to illustrate what's going on here and what the market dynamic is. Because the Grayscale Ethereum Trust has had a lot of ETH locked up for a long time, and there's now a bunch of competitive products, we're seeing quite a lot of volume from this particular ETF provider, but a lot of that is actually outflows. In the first day, which is what you can see here in this chart, there was a total of just over $1 billion in total volume done across the ETFs, but the total inflows, i.e. the amount of new Ether purchased in total, net, is only around $106 million. If you exclude the outflows from the Grayscale Ethereum Trust, then it would have been nearly $600 million, which would be generally much better, considered much better performance. So it was expected that the Grayscale Ethereum Trust might have some outflows early in this piece, given that these assets have been kind of more locked up for a long period of time, and there's now more competitive offering from a fees perspective. So we are expecting that potentially these outflows might continue. On the second day of trading, i.e. yesterday in US time, we had actually a net outflow of 113 million, which means that we're almost flat or very slightly net outflow now for the first 2 days of trading. This again was due to heavy bleeding from Grayscale's Ethereum Trust. But on the optimistic side, Fidelity's Ethereum Fund and the Bitwise Ethereum ETF actually led with some pretty significant inflows, posting 74.5 million and 29.6 million inflows respectively. So even though we're seeing some pretty significant outflows from the Grayscale Ethereum Trust, we're definitely seeing inflows for those other providers. And I think that's definitely more optimistic for the long-term future of this product. And to compare that, of course, to the Bitcoin ETF launch, which I think is really important and actually had a similar trend. Of course, Grayscale had their BTC Trust, which also launched in conjunction with the other Bitcoin ETFs around, I think it was the 10th of January this year. And they actually posted cumulative net outflows for 6 out of their 10 first trading days, which absolutely was down to Grayscale's Bitcoin Trust having pretty significant outflows, because again, that product had been around for quite a long time and now had quite a significant amount of competition from lower fee competitors. So looking at the chart here, you're looking back around here at the 9th or 10th of January. And interestingly, we see about a week or two of negative to flat price action before we see the ETF inflows and some other bullish catalysts really kick in and take our Bitcoin price from around that $40,000 mark up to our all-time high of $73,777. So what we're definitely seeing speculation on at the moment is whether Ethereum may follow a similar path, which would allow for, maybe a week or two of volatility before the inflows really kick in and start to have a positive impact on that price action. Remains to be seen, but I thought I'd finish the episode with Polymarket, which of course is the prediction market that has really gained some traction this year. Does Ethereum hit an all-time high this year? 18% believe that will happen in quarter 3. 30% believe in Q4 and 55% believe that there will not be a new all-time high for Ethereum in 2024. Super fascinating, and I'll definitely be watching this for some more market insights from the prediction markets. That is all on the ETH ETFs for this week. So I'm going to wrap up with a bit of a disclaimer, but please like, subscribe, and engage with us on social media. Please, we're going to keep throwing out for questions on these episodes before each week. Please let us know what you'd love us to talk about, who you'd love to hear from, and what you think's going on in the crypto markets. Please note this discussion includes insights from non-affiliated third parties and key opinion leaders. Binance provides this platform for informational and educational purposes only and is not responsible for any content or insights provided. This information should not be considered as financial, tax, or investment advice from Binance. Thank you so much for joining me. Have a fantastic weekend, Binanceans. We'll catch up with you next week. Until then.